But anyways, yeah, I like silver. I'm going to probably look to take a long position here today, potentially, if I can get the right entry. With just a few minutes to the stock market open here, I'll probably open or take a position at the open. Let's see how it goes. I like silver. I've been waiting for a pullback here. Finally starting to get a pullback. Going to take my first attempt on the long side for silver, getting a +8 reading on the edge finder. And that is good enough for me. With the pullback, that's going to be an entry. Now, I just want to preface this. Sometimes I take trades directly on live stream when they happen. I just want to warn, this is not financial advice. I'm not here to tell you what, to do in your own trading account. And the reason I preface that is because this is one trade, and silver, although I'm getting long here, could completely tank in the next few days. We have CPI, PPI. So please understand, I am not here saying, oh, silver is certainly going higher. I just like the risk to reward. And this is one more trade that I'm going to place on my account, looking for SLV to the long side. I like this pullback, 38.2. Nice momentum here forming recently for silver. I've been mentioning recently that I'm looking for a metals pullback and finally starting to get one on silver, which I quite like. COT data looks good for this one. Retail positioning season out, and most of our factors here are actually favoring silver longs. So I'm definitely going to look for that trade. Again, one thing that new traders oftentimes make the mistake of thinking is that professional traders or people who do this profitably never take losing trades or never make mistakes or never have wrong trades. I'm telling you full well, I am taking a long position on silver and it may not work out. And that would just be one more trade. It's not a big deal. What most traders do where they fall short in their trading is they have an idea of, oh, I'm going to get long silver and I'm going to leverage up and I'm going to go all in. And if this works, I'm going to be rich. And if this breaks, then my account's going to blow and I'm going to look for someone else to blame. Don't let that be you. This is just an idea I have. I like the risk reward here. I'm not leveraged at all. This is going to be a controlled size position on my account. And if it doesn't work out, then it doesn't work out. I like the idea of getting long silver here with the stop loss below the 61.8% retracement. It's going to be about a 3 to 3.25% move here to the downside. I am looking silver-wise for a possible return back towards these highs that we saw back in October. So this is more of a swing trade, but it's a trade that I really like, and I'm going to take a stab at it this morning. If it doesn't work out, like I said, if we fail to hold support here and at the 61.8% retracement, if that level does not work out, then I'll stop out of the trade and take a loss on it. Yep, so I'm just waiting for open here. I'll probably initiate a position on silver. You've got S&P 500 down a little bit here this morning. Let's take just a look at pure price. This is what I've been talking about, guys. The indices have just been very indecisive, up and down, up and down. We're near these all-time highs, and the market is still trying to figure out if this is kind of a sell the highs moment or if it's a prime for a breakout kind of moment. And in my opinion, with tariffs and with uncertainty about what geopolitically we're going to see, I mean, look at the price of gold has been screaming higher. There's some warnings here that I think is, making stock market investors a little jittery. I still overall love the idea of, the AI trade and investing and trading into the stock market. But I would prefer to either see a new catalyst that takes us to new highs with some strong bearings for possible longs, or a larger dip to the downside would actually be very interesting to me for, some buys on that side. But buying and selling it here, there's nothing. We're just choppy. We may go down, we may go up, but until you really see a solid breakout through those highs or a return back down into these lows, it's just kind of a no man's land. Again, I've not been trading this because it's just been so indecisive. If you're betting it's going down, maybe it works out, but again, I don't see. Now, if I was to be bearish on the NASDAQ, I'd want to see earnings reports that were horrible. I'd want to see tariff news really scaring markets. I'd want to see this kind of price action. But right now, to short this or to buy this just doesn't quite make a lot of sense to me. There's not like a clear, decisive trend. In this environment, this was an easy uptrend to play. During this period of time, you had an easy uptrend to play. But right now, what do you have? You have a choppy, no direction market that, gets faked out in every direction right now. So just going to wait.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
So we'll see. I like the upside for silver here. We'll see what happens with the market. Stock market opened up here just a moment ago. You had a nice immediate response here, higher for the NASDAQ, S&P 500 also gaining back some lost ground. You got the Russell. Look at this. Russell down almost 1% on the day. Some uneven distribution here, also taking a little heat alongside the metals. Bitcoin's down 0.6%. So very interesting open here. Getting some divergence across the major three indices are pretty much neck and neck here in terms of returns this morning, all down about 0.3%, except for the Russell. The Russell getting beat up more so than the others has been a theme here recently. Oil prices are on the rise here recently. You've got up another 1% following the hit of this support around 71.50. Big bounce back on that side of things. Copper also down here about by 3%. We had this huge move higher in copper, up 11% at one point. And then you had gold here. This is obviously a big story mover in the markets right now. Yesterday at night, I was looking at, just checked the markets, and we saw $29.40 on the price of gold. That is absolutely crazy. An all-time high here, printing last night. But look at this. Just goes to show how volatile we are on gold. Down $40 per ounce overnight. So not a huge thing. And again, if you're a bear celebrating this, just like, you got to be careful, because zoom out and like, what are we celebrating? Like, bulls are in absolute control here on gold. I don't necessarily love the idea of buying it at these levels, but this bullishness does not want to quit, it seems like. And for me personally, I like the metals on the long side, but clearly, as I just took a position on silver, I prefer the long side of silver at this time. We'll see if we can get a pullback, but if we don't, we don't. And then, markets continue. In fact, I wouldn't mind if gold continues, as long as silver does as well, as I'm long silver. Can you talk Bitcoin for a second? Yep. Bitcoin is super range bound and super not doing anything. Same thing with the indices. Like I said, I've said this many times on the stream recently. I trade a lot of things, and when something kind of it becomes dead money, quote unquote, like it's just not going anywhere, I usually just move along and trade something else. Like I'm looking at commodities right now. I'm looking at some currencies right now, but indices and crypto, which typically move similarly, just look really choppy. I'd like to see for Bitcoin the same concept as the NASDAQ, either a breakout and retest of these highs, or a kind of further sell off into this low 90,000 level once more, where we seem to have found support several times. But for me right now, I don't really have any strong confirmation on Bitcoin. It's not on the top setups page anymore. At one point it was. I made some good money on the long side of Bitcoin, but since then have it's faded back to neutral. So I just really don't have the same interest. Look at this, the Russell even getting a bearish reading on the Edgefinder. That is fascinating. And the Russell's just been getting killed here recently. It's been really struggling compared to its peers. I mean, you have all indices slightly in the red, but look at the Russell, nowhere near its all-time highs. We're talking about, to get back to all-time highs, that's a 8.75% return just to get back to the all-time highs. Meanwhile, take a look at the S&P 500, which is just modestly off its all-time highs by about 1.3%. So clearly the Russell is the underperformer so far these last few months. But we'll see if that stays the case. If you start to get some possibilities of rate cuts, which we can take a look at that in the form of the 10-year government bond yield, which has been rising here a little bit recently, but off of that 4.8% high, we'll see where that goes. But, I have a long position in TLT, not going so hot today, down about 0.56%. But I recently added a little bit to this trade. I like the potential momentum forming here, but we've got to see it kind of turn around and go higher here pretty soon. We'll see if we get some cool inflationary numbers tomorrow. That could certainly help. But we'll also hear from Jerome Powell today, as he is speaking in Congress, and he's testifying there. So we'll see. Should be an interesting. It's always dramatic with that stuff. So we will see. Gold down 0.25% on the day, but again, up massively on the year already. I mean, what are we up in January to now? Let's see. So here's beginning of the year to now. Gold is up already 10% for the year. That is absolutely crazy. And by the way, guys, that's following a year where gold was up 30% last year, right? Or so, somewhere in that neighborhood. What's your thoughts on the DAX? Yeah, a couple people talking about the DAX here today. DAX looks really strong. I mean, it's been very strong. I think there's interestingly some markets out there that are benefiting more so than others on the tariff stuff. Now, the tariff stuff is still unknown, but there's a lot of markets, for example, like the Mexican stock market, the DAX, other places where the tariff fears may have overshot a little bit. And now you're seeing those tariff fears as they erode away a little bit. Those markets are having absolute runs to the upside. Meanwhile, stocks in the US are a little bit flat here recently. So just something to think about as you're getting some non-US markets. For example, the Chinese stock market is ripping. Why? Because tariff fears may not have matched up to what's actually happening for now. The tariff stuff is not necessarily over. We could see increased pressures on the tariff side, ramping up those, things. But so far, what the market may be seeing is that, maybe Trump was using a lot of the tariff stuff as negotiation tactics rather than truly, massive disruption to global trade. Now, I'm not saying it's over, but that seems to be what the market is trying to pick up on. Like maybe those fears were a little unjustified. Maybe they're a little overdone. And you've got Chinese stocks, which Chinese stocks look really good right now, guys. I mean, on a valuation perspective, they're much cheaper than US tech stocks. Like if you take a look at K-Web, this is a Chinese internet stock ETF. This one is absolutely ripping, right? If you take a look at year-to-date performance for this, you are talking about a return of 12%. Meanwhile, stock market's not done 12%. So Chinese stocks looking very interesting. I actually really like upside for Chinese stocks this year. They've been really beaten down over the last several years. Perhaps if the trade war stuff does not, and I do mention this cautiously because, of course, if you get trade war escalations, this thing could absolutely tank alongside U.S. equities. But we'll have to see. I mean, I like the upside. I like the risk to reward to Chinese stocks, especially if you get some dips. I've been trading in and out of them for, a couple years now. I don't own any currently, but would be interested if you get some dips. NASDAQ was down as much as 0.7% this morning, now down 0.3 or 0.25. NASDAQ jumped out of the gate here. There's that 9:30 open, big push to the upside, coming back in. S&P 500 also looking really strong. You're mostly a currency trader, is that right?
Yes.
Okay.
Yeah.
So talk to me a little bit about what you trade and what you focus on most.
So I focus on the majority spot FX. That's my choice, and I'm a swing trader. Occasionally I do day trade, and my approach to the market is a blend of technicals and fundamentals. So I like to trade the strongest currency against the weakest, and if there's any polarizing sentiment that can add to the strength or weakness, that's definitely a plus. And then as far as for day trades go, very occasionally, but I will do it. And I basically do a mean reversion trade after a news release. So fading the move back down to its price of origin. but I only do those under very specific set of conditions.
Sure. So when you say strongest currency versus weakest, what would that be to you right now? Like what are you watching the most right now?
So at the moment, it'd probably be the pound because they're very dovish, and the Canadian dollar. The
Okay.
Canadian dollar because it's very, you know, susceptible or vulnerable to the tariff news.
Hmm.
So with that one, you will know pretty fast, depending on upcoming tariff news, if you're right or wrong.
Awesome. And do you typically trade? Are you mostly like, so you said swing trading. Do you do usually like counter trend, like buy low, sell kind of high kind of approach? Or are you more momentum focused?
Momentum focus. So I never go against the trend.
Okay.
Even in my mean reversion trades when I'm fading news events, if it's going with the trend, I'm not trying to catch the fade back to its point of origin.
Sure. Yeah, no, that makes sense. I mean, that's the thing is I've been in the markets for some time, and I've always found it's just easier to go with the flow than trying to fight it. And that's, I know you hear that a million times as you get into trading and try and figure it out, but it really is true. It's important to kind of stay with the wind in your sail rather than the other way around, trying to sail upstream, whatever reference you want to make. But very cool. So tell me a little bit, like for example, how are you feeling about the dollar right now? How have you do you watch a lot of dollar crosses?
Yeah, I think you described it pretty good. Right now, it's kind of chopping.
Mhm.
It had some really nice moves, when the tariffs were first announced, and now they kind of just died down. And I think it's more of a decision of, was that really just a negotiation tactic to bring everyone to the table to get some deals done, or is he really going to implement these tariffs, and are they really inflationary? So
Yeah.
as far as like what pairs, I mentioned the Canadian dollar.
Hmm.
If you look at the Canadian dollar on the 4 hour, it's been in this range, and it's the one that's had the biggest discount relative to the other currencies against the dollar.
Yep.
So if I were to go ahead and trade this dollar, it'd be via the Canadian dollar.
Nice. Yeah, I'm currently long the dollar CAD, and the dollar itself is interesting. There's some divergence, right? You could be looking at something like the pound, the euro, but I do like the dollar CAD as well. I think it's pulled back quite a bit here. The dollar itself, price action wise, seems a little bit choppy, but the overall story for the dollar is hard for me to truly fight unless we get something really interesting this week with CPI. If you, for example, get CPI data that comes in really light, that could be something to seriously consider. I don't know if you've checked out the new U.S. economic heat map. I think you have. I think I saw
Yeah, it's flipping red.
Yeah, it's looking red, and it's changing here. The dynamic is shifting a little bit. What I'm very curious to see here this week would be, if CPI and PPI, if those kind of continue to cool, that could be really weak for the dollar, right? We could really see one of the last dominoes fall, if you will. Like you've seen services PMI come in a little bit light, GDP numbers kind of missed expectations, retail sales came in a little bit light, jobs numbers were mostly good with the revisions included, but JOLTS job openings were soft, and so you've got all these things playing together. The last domino to fall, I guess, would be if you got some really cool inflation data to surprise to the downside. Actually, I want to show you something too. This is worth checking out for everybody who has not heard of Trueflation before. It's a cool site that takes independently like a million different variables and produces its own inflation kind of guess. And I quite literally think it's like a million variables that are inputted into this. Inflation is very hard to calculate, but this Trueflation graph I think is pretty interesting, coming down to 2.11%. That's the Trueflation U.S. inflation index. So we'll see if there's some truth to that. If that's perhaps leading some guidance towards perhaps some soft inflation numbers this week. I don't know. Those things it's very difficult to try and predict, but at least would be worth considering, because if you get some big slide in inflation, that dollar index may finally break that 107.7 level.
So tell me this, like the dollar is kind of flat, right? As well as the indices, they're chopping around. And I don't trade this, but I remember in your 2025 predictions for gold, you said 2,800 or 3,000, somewhere around that area. And we are there. Why is that? Like, what's what's the point? Like, why is there that much uncertainty right now in certain aspects of the markets?
That's actually a great question, because I think a lot of people are probably wondering the same thing. They say like, look, we got dollar index. That does not look like a weak chart. I mean, it doesn't look like it's as strong as it was over here, but it doesn't look like a weak chart. Let's cross that. Take a look at gold, which just straight up also looks like a very strong chart. It's very understandable why the heck do we have a whole bunch of uptrend on both? And I think what it comes down to, Alan, is like, okay, so if we're thinking dollar index, well, remember that the dollar index is like, let's look at all the currencies against the dollar. All the other currencies look even weaker because, you know, you had the Bank of England, for example, you referenced that earlier, super dovish, looking to cut rates for the most part. Then you have the Bank of Canada, then you have the ECB. They're all looking to cut rates. Meanwhile, the US, the Fed, is kind of in this position of like, we might get one rate cut this year, but it's very different, right? So the Fed is very hawkish. So I think if you took a look at all currencies, most currencies are looking to cut rates. So that really favors gold. You also just mentioned there's geopolitical uncertainty. There's the Trump tariffs that people are worried about, uncertain about. So there's a driver to gold on the geopolitical front, and globally, most currencies and their central banks are looking to actually cut rates, including the Fed. So you have like a trend towards rate cuts, which is bullish for gold, but then you also have dollar outperformance. So this is why it can be a little confusing, but the dollar and gold can move in the same direction sometimes. And it always makes everyone a little bit confused, but that'd be my best answer to that. Do you trade gold at all, Alan?
I don't, but you know what? I'm forward testing gold and also like the indices as well, because my approach is pretty transferable. It's kind of similar to yours, honestly. It's pretty transferable to those assets if you're more of a swing trader. Right now, I'm just more of learning like the characteristics of each one. Like gold is very volatile, it moves really fast, right?
Yep.
The S&P is kind of like it'll respect levels more. So the S&P to me is more like the euro. So I'm just kind of learning those, but you know, after all these moves and forward testing, I could see myself definitely trading these assets.
Yeah, the thing about gold that I think is very attractive is when it does make these kinds of trends, and this is why, Alan, personally, I trade a lot more indices, commodities, is because the trends can be really, really persistent and strong for commodities and indices. Sure, they can also be for currencies, and I do trade currencies. But I've made the point, you know, if you look at, for example, like the dollar index, you know, there's like a long-term kind of sideways chop to it. Whereas if you look at gold, there's a long-term bullish trend to it, right? There's a long-term kind of drift to the upside. And that by itself just kind of inherently makes the bullish side of gold slightly, not a lot, but slightly easier to trade than the short side. The short side is just going to be a tougher thing to call. That being said, one thing to think about is that if you can catch the right short side move on the indices or on gold, the returns can be very quick and very aggressive. Like when you get these steep sell-offs in indices, this move right here for the S&P 500, that was like a 10% move in just like a very short period of time. So there's give and take to the long and short side. But yeah, really, really interesting just looking at the metals here recently. I took this morning a position on silver. We'll see if that works out, but it's getting a strong reading. And I think benefits from what we're talking about here with the heat map, Alan, is like we've got some data points that are leaking into the red territory. So I do tend to like metals a little bit more if we're starting to see this. Now, if you get cooling inflation persisting this week, then that looks incredibly good for metals specifically. You got some cooling in the economic data and cooling inflation, but we'll see, you know, what happens there.
And that's the beauty about being able to, you know, trade different things. You know, in my shoes here, when there's no opportunities in FX, I'm sitting on my hands, right, waiting for an edge to appear. Whereas you can, you know, go ahead and transition into other things that are more relevant at the time.
Yep.
But I want to go over to the yen. How do you feel about the yen? I know you shorted the pound. Do you think for myself and the viewers too, what do you think that trend will continue on?
Yeah, so the yen has has been an interesting one. I've been watching, I know you probably have seen, if you've been also watching, I think I watched one of your videos and you were talking about the yen as well. If I look at something like Swiss yen, the we talked yesterday or the other day about just how, if we're talking swap payments, this is a little bit more of an affordable way to approach the Japanese yen. So I'm watching for this trade, but I'm not in like a big rush to get in on it. So I'd like to potentially get short something like Swiss yen in favor of the Japanese yen, simply because of like the divergence between central banks here, right? We've got the Swiss National Bank looking to cut rates, and then we've got the Bank of Japan looking to actually hike rates because they've had some pretty upbeat inflation data recently. So there is a divergence here between central banks that I really like. And it kind of reminds me of back in 2022, the opposite was true for the dollar yen, actually. The dollar yen had such a dominant trend. And this is the thing about currencies is they can be very range bound, but they also can have monster trends too. Like, for example, here's 2021, where the exact opposite was playing out. So if we take a look at US versus Japan during this period of time was actually looking to continue to keep their interest rates very, very low and stimulative to their economy. And the US was dealing with a spiking inflation after the transitory inflation comments stopped. And people were like, oh, we're going to need to really, tighten up on inflation. The dollar yen kind of embarked on this massive uptrend. So I think we may be, and it's a little bit early to call, but it's possible that we're entering into the opposite effect now. We're entering into this environment where the Bank of Japan is now looking to hike rates with some of their inflation rising, and the US and other central banks are now dealing with the opposite kind of situation. Inflation is seriously cooling off, and maybe they start cutting in order to keep the jobs market from sliding. So yeah, it could be really interesting shift of that dynamic. But yeah, I do like the yen to the upside, and I'll look for ways to play it with kind of minimum risk to reward, I guess, on my side. What about you? Do you have any yen trades?
The Swiss too, because the Swiss right now is at 0.5 basis point, and so is Japan. So there's really no like that swap risk that you have.
Yep.
And it seems like the Swiss is getting dovish, and they might want to go to zero, whereas the Japan is going to go ahead and hike the rate. So that might be the only one out of the yen pairs that you don't incur that swap risk. If you're holding it overnight, if you're gonna intraday, then I guess you could go ahead and do like the pound yen or whatever. But if you're trying to catch a larger move, like you mentioned, the Swiss yen is the most reasonable one to go ahead and hold for that long.
Yeah, I love that. And as you just mentioned, Alan, we had, again, the Swiss yen, for what you just referenced for listeners, the interest rate divergence between the two currencies is pretty much zero right now. And what you just mentioned too is that if the Swiss, right, actually reduces that down to zero, and the Bank of Japan actually continues to hike rates, there would actually be a positive potential carry or swap paid to you for shorting the Swiss yen. So I have my eyes on that trade. I think it's a very popular trade right now, but with that popularity, I think that the risk reward starts to get a little bit more attractive if you do get a bounce. So I'm looking for that opportunity to continue lower.
No, I definitely agree. I would, that would be more, that pullback might take a while, but just getting in at a better price, your risk reward, your expected value increases. Yeah,
exactly. Yeah. Somebody said in the audience, they're just rotating the same questions over and over: housing, regulation, all that stuff, but nothing too pressing about interest rates or inflation. Market's not really moving too much off of this. There was not a huge amount of market response here. Gold, however, kind of back to break even on the day. Gold and silver both rising during that period. Nothing super dramatic. Stocks also rising, but this was before. You can see kind of the move in gold and silver was before and after the event started. So here's NASDAQ. I mean, big pop here on the day. Nothing too market moving so far in terms of headlines. Remember that Powell is testifying today and he's testifying tomorrow as well.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.